The Australian dollar gives up early gains on Wednesday. This is Chris from FXEmpire taking a look at the Aussie dollar. You can see that the Australian dollar has reached towards the 50-day EMA only to give up quite a bit of the gains early in the session. This comes right after a session that initially on Tuesday pierced the 50-day EMA but also gave up gains. So what this tells me is that it's going to be very difficult to continue going higher and break above this 200-day EMA. Now, that doesn't necessarily mean that the pair falls apart from here, just that we will continue this tight, choppy behavior. The 0.65 level underneath is an area that I think is rather important. Even though we've jumped through it a couple of times, it's a large round number that I think will attract a lot of attention. On the upside, the 0.66 level is obvious resistance, assuming that we can even get there. And essentially what we've done over the last 2 days as the Aussie has risen has just gotten halfway between those two levels. If we can break out above 0.66, then 0.67 is your next target. All things being equal, the Australian dollar continues to move on the idea of interest rates in the United States, global trade, and of course, the Chinese economy. Remember, the Australian dollar is basically a proxy for China for FX traders. It's also a proxy for gold at times, although you're not really seeing that on this chart. And of course, just hard commodities in general, as that's a bulk of Australia's exports. Simply put, this is a market that is trying to get up off of its back, but has a lot of headwinds due to the fact that the global economy is throwing out all kinds of bizarre signals. With that being the case, I think we remain range bound in the general vicinity that we are trading in currently.